Can I get an account receivable-backed loan? Call 888-653-0124 today or click the link in the description to learn more. Are you struggling to find financing for your small business? Have you tried everything and nothing has worked? Well, here's a new option. We all need good credit to buy things. When you apply for a loan, lenders look at your credit score. If you don't have any, they won't give you the loan. But what if you had access to cash right now? Would you be able to pay off your debt faster? Or would you be able to invest in your business? A AR-backed loan is a type of commercial loan where the lender may demand payment from the borrower even if the borrower does not pay the debt immediately. This means that the lender has the power to collect the outstanding balance of the loan. An AR-backed loan is usually secured against accounts receivables, AR, such as invoices or other documents that the company owes to its customers. The lender typically gets paid back through the collection of these AR. This type of loan is often used in situations where the amount owed to the lender exceeds the value of the collateral. For example, a company might borrow $1 million from a bank to purchase inventory. If the company cannot repay the loan within 30 days, the bank would have the right to seize the company's assets. How does an account receivable-backed loan work? An account receivable-backed loan is a type of credit facility that provides funds for companies to pay their accounts payable (AP) obligations. The AP obligation includes vendors who provide goods and services to the business. It also includes any other liabilities that must be paid out of operating cash flow. The term accounts receivable refers to the amount owed by customers to the business. When a customer pays his bill, he becomes an asset to the business. If the business owes money to its suppliers, this debt is called accounts payable. A business uses accounts receivable financing when it wants to raise additional capital without having to sell stock or issue new debt. Accounts receivable loans are usually used to finance short-term working capital requirements. They are often available from banks and other financial institutions. Accounts receivable financing differs from traditional bank lending, because there is no collateral involved. Instead, the lender receives a security interest in the accounts receivable. This means that if the borrower defaults on the loan, the lender can seize the assets pledged as security. In addition, the lender typically has a right to set off amounts due to outstanding balances on other types of loans. For example, if the borrower cannot make payments on a line of credit, the lender can use the unpaid balance to offset the amount owed on the accounts receivable loan. The most common form of accounts receivable financing is the revolving line of credit. A revolving line of credit allows businesses to borrow up to a certain limit. Because the amount borrowed is limited, the borrower's ability to repay the loan depends on how much cash remains after paying other expenses. What kinds of accounts receivable-backed loans exist? Types of accounts receivable backing loans. There are two main types of accounts receivable-backed loans. 1. The first type is called a short-term loan. It is usually used when a business wants to finance its operations during a short period. We often refer this type of loan to as a cash flow loan. A cash flow loan is typically used to fund operating expenses such as payroll, rent, utilities, etc. 2. The second type of accounts receivable-backed loan is called a long-term loan. Long-term loans are typically used to finance capital expenditures like building new equipment, expanding facilities, acquiring another business, etc. A business owner needing asset-based lending should consider using a long-term loan. Commercial lenders typically offer these types of loans. Business owners seeking a short-term loan should look into a line of credit or a cash advance. Receivable financing companies offer both long-term and short-term accounts receivable loans. Typically, these companies specialize in providing funding for small businesses. When should I consider getting an account receivable-backed loan? When should I consider getting an account receivable-backed loan? Accounts receivable, AR, loans are short-term financing solutions used to help businesses cover cash flow issues. They are usually paid back through invoices from customers. The amount you borrow depends on your current accounts receivable balance, how much money you expect to collect, and what type of business you're running. The AR loan process begins when you submit your application online. Once approved, we'll send you a letter confirming your approval. You'll then receive a call from one of our lenders, who will walk you through the process and review your financial documents. If everything looks good, we'll schedule a meeting with you to complete your paperwork and sign off on the loan. What type of account receivable-backed loan interest rates offered? Call 888-653-0124 today or click the link in the description to learn more.